To thank everybody out there for grabbing a drink. Please grab a drink or two. Double fist is okay. And grab a seat in here. We'll give you a minute to settle in. While I introduce the judges, Mark Burridge, managing partner and fund manager of Baker Steel Investment Managers. Mark, welcome. Mr. David Street, co-founder and CEO of Tembo Capital Management based here in London. We also have Daniel Porter. He's a portfolio manager, resources of Pure Asset Management. Robert Dixon is the managing director of the Dundee Corporation. Karim Michel Nasser is the chief executive officer of La Mancha. Again, everybody out there, we'd love to see you in here. Don't be shy. I'll point fingers at all of you. Come on. Come on in here. Our competing panelists, I want to say one thing before the presenters come up. If you go over the 3-minute time, 15, 10, 20, 30 seconds, maybe even a minute, I'll consider that when I have to break the tie vote, and it won't be a good thing. So do not go over the 3-minute time limit. Also, if you leave at any point before the judges make their decision, like one individual did yesterday, I'm not going to look kindly at that. Okay? I'm just letting you folks know. Go over if you want to at your own risk, the 3 minutes. I will cut you off. And just a few Tourette's words from the mining sector right now. Open pit, head grade, and leach pond. Okay? There you go. You guys don't know. Are your mics working? The rest of you, you just rather just stand out there. That's fine. That's okay. I don't blame you. All right, we are going to begin with one of our presenters. We will have 3 minutes for each presentation and then 7 minutes for the judges to ask their questions. And I will go up and down here and try and give you some time to ask the questions. Now, with regard to the 3 minutes, keep in mind, folks that are presenting, if you don't get everything in that you must say during that 3 minutes, you'll have some time during the Q&A to address some of those things. Just don't be ridiculous about it. We will begin. Now, here's a guy you want on your side if you're in a rough and tumble. Also very dapper, Paul Fowler, the Senior VP of Magna Mining. Ladies and gentlemen, give him a hand.
So, for anyone that wasn't here yesterday or doesn't know, this is the Big Nickel in Sudbury. It's about 30 foot high, and it stands testament to the 120-year mining history of nickel in Sudbury. Sudbury is probably the oldest, the richest, the most storied nickel mining district in North America. And it's also probably in the very small handful of world-class nickel sulfide ore bodies globally. The reason for bringing that up, by the way, is that Magna is the only junior nickel mining company with advanced stage assets in the Sudbury Basin. And this is a graphical representation of that. You can see Vale, Glencore, KGHM, Magna Mining's property are down to the southwest side here. We have two key assets, the Shakespeare past producing mine and the Crean Hill past producing mine. Incidentally, this map accounts for 9 of the 11 critical mineral producing projects in the whole of Ontario. So this is our business model. We're aiming to reproduce the hub and spoke production model in Sudbury. The Shakespeare mine is a past producing nickel copper PGM mine, 20 million ton indicated global resource, and perhaps most importantly of all, permits to construct a 4,500 ton per day open pit mine, mill, and tailings storage facility. The very recently acquired Crean Hill mine, 30 million ton indicated resource, which includes 14.5 million tons of high-grade underground. And we project they will both feed into a centralized Shakespeare processing plant, for which, of course, we have the permits. The combined resources of both Crean Hill and Shakespeare are approximately 650 million pounds of contained nickel, or 300,000 tons. So that means, of course, that Magna is certainly in the conversation when it comes to solving the near-term demand for nickel from the EV sector. The idea is that we'll produce our own nickel and copper concentrate, which includes payable copper, platinum, palladium, and gold. So we believe we're a uniquely positioned junior company. Many of these characteristics you won't find in other companies, and it's certainly very rare to find them all together, not least having multiple assets moving towards what we hope will be a hub and spoke production model. We have major permits in place. We have the potential to expand our existing global resources. And perhaps most excitingly of all, we think that there are some excellent, potentially world-class exploration targets that come with the Crean Hill acquisition. The last point, which just skipped through accidentally, was that we also believe there's the potential for us to move into near-term cash flow through toll milling from Crean Hill at one of the mills that exist in Sudbury at the moment, of which there are 2 with capacity. So what's coming next? Lots of drilling next year. We're hoping to reproduce some of the drill results we came out with Crean Hill last week with some of this massive sulfide that you can see on the screen. We'll be commissioning a PEA on Crean Hill to show everybody what we think, hopefully demonstrate the economics of this newly acquired deposit. And we'll be looking into more detail about the potential for us to move into cash flow in the near term via toll milling. And with that, I'll happily answer any questions.
Great presentation. Thank you very much, Paul. Let's start with Corinne Michel. Your first question, please.
So could you talk a little bit about the technology you're envisioning for processing the sulfides?
Well, it's conventional. It's conventional flotation. Sulfides have been processed in Sudbury for 100 years plus. So there's nothing complicated about it at all. All the ore bodies in Sudbury are very reasonably homogeneous, including the Crean Hill acquisition that we just made. So conventional flotation technology. Sorry.
Okay, Rob Dixon.
Can you just touch on, you mentioned both their exploration upside to both of your assets, Shakespeare and Denison, et cetera. Can you just speak to the exploration upside and also, you know, related to that, obviously, the ability to expand those resources, you know, to feed that central mill?
Yeah, absolutely. It's hard to do that in a couple of minutes, but I'll give it a go. Crean Hill. I'll talk about Crean Hill predominantly because it's the one we're most excited about from exploration upside. Make no mistake, Shakespeare has significant exploration upside. It's just that we don't yet fully understand the geological model at Shakespeare as well as we understand it at Crean Hill. And the reason we understand it at Crean Hill is because this model has been discovered in Sudbury since the first nickel discovery. We think FNX is a good parallel to draw here for anyone that's familiar with it. FNX created a 1.5, at one stage, $2 billion company out of exploration potential in the footwall at their deposits, which looks exactly like Crean Hill. Crean Hill is the only deposit in the whole of Sudbury, significant what's called contact deposit, where they have not yet discovered the footwall. So to try and summarize it as succinctly as possible, we're looking for the footwall deposit along with extensions to the existing resource at Crean Hill, which we're reasonably comfortable exist.
Mr. Porter.
Yeah, great prezzo. It sounds like you're pretty advanced. If you had $20 million, what would you do with it tomorrow and where could you get to in the next sort of 12, 18 months? And second question, if I may, why haven't Glencore and Vale taken you out yet?
Well, I'll answer the second question first. You have to bear in mind that we only completed the acquisition of Crean Hill 4 weeks ago. So this is brand new. And in fact, this is our first overseas marketing trip. And even prior to that, as a company, everyone was under lockdown with COVID. So we haven't really gone out and told the world about our company. What would we do with $20 million? Well, at the moment, we're projecting a budget for next year, which is, I mean, it's significantly less than that at the moment, but that's entirely focused on drilling. Like we believe that there is incredible value to add through the drill bit, particularly at Crean Hill, because of all the exploration potential. So that's where, I mean, I'm not sure we could spend $20 million on drilling because you have to make sure you target things properly and don't have rigs running all over the place, and you want to make sure you do it properly. But a bulk of that would go to drilling at Crean Hill, no question. We are looking into the possibility of doing an advanced exploration permit as well with a bulk sample, which could potentially, and I say potentially, move us into production via toll milling, and that would cost somewhere in the region of 20, 30 million. So that's something we'll look at next year. I'm not sure I'd commit to spending that yet, though.
Thanks.
And where are we at here? Mr. Street.
Thanks. It's a good presentation. Can I ask a little bit about the management team backgrounds, experience in this part of the world, and secondly, about the shareholder sort of makeup at the moment?
Yeah, I'll start with the latter one. The shareholder makeup, Dundee own 22% of the company. They've been incredibly supportive shareholders, and Jonathan Goodman is actually now on our board. We also have a new long-term investor supportive shareholder called Hawke's Point, and I think we're their only investment in Canada. They came in on the last financing round, which we completed with the acquisition of Green Hill. The management team, this is an important point about our company that I didn't have time to really elaborate on the slides, but with the sole exception of me, as I'm sure you might be able to guess, the entirety of our management team is based in Sudbury, lives in Sudbury, and has spent most of their professional lives working in Sudbury. So they know the basin inside out. It's the reason that we were able to identify this asset as a highly attractive acquisition when nobody else knew about it. We have operational expertise in Sudbury. We have geological expertise in Sudbury. And in fact, we've got a whole bunch of people from FNX, who I mentioned earlier, that are now engaged by us or working for us and keen to get to work on Green Hill.
Thanks.
And finally, Mr. Burridge.
Great, thanks. Would like to understand a little bit of the history of the company. Like you said, this is the first time you've been here. Tell us a little bit about the history. What you saw that your neighbours didn't see when this asset came up for sale? Because you're telling me that one of your neighbours got spare mill capacity. Here's a deposit with what looks like attractive resources. How were you able to outbid them for what would have been a nice bolt-on? And what's that? And part of that answer should be, what is your vision or story around the value you've added to the asset base?
So the first part of your question about how we were able to outbid anyone on the asset. So we approached the owners over a year ago and told them of our interest. And the reason we approached them is because we've always had this vision for a hub and spoke production model where our existing asset, Shakespeare, is the hub. So we're interested in all sorts of possibilities of subsequently acquiring the spoke. So we approached them. They weren't running a process. So to some extent, we got a head start on anyone that may have been interested. But the other answer to that question is that it goes back to the map I showed earlier. The only, well, KGHM are not even actively engaged in Sudbury much anymore, apart from their Victoria mine. So the only two active mining companies really are Vale and Glencore. And there are some estimates, and don't hold me to this, but there are some estimates that Vale have somewhere in the region of 50 to 100 million tons of ore in inventory they're never going to get to. And it's a function of the patented land in Sudbury where they can hold it forever and never do anything with it. And they're either too small or they're deprioritized versus their other world-class assets. So all of our competition that might bid for it wouldn't have any interest. And then on top of that, Green Hill itself, we did a whole ton of due diligence on it, but of course we applied relevant commodity prices rather than when the resource on Green Hill was last calculated, which was a whole cycle ago. And we also applied the filter that we could potentially process this through our own mill at Shakespeare. We didn't have to assume that we would go through a third-party toll mill. So that meant that we were looking at it with very unique eyes, and we were probably very uniquely positioned to buy it, and we got a head start on all the competition.
Great, thank you.
Thank you very much, Mr. Fowler. Great job, and good luck to you.
Thank you very much. Thanks.
So let's get the votes now. I'll take the tally. Let's begin with Mr. Nasser. You need a microphone, sir.
So do we need to vote straight out? Or?
Yes.
Yeah.
Who do you like?
There's two I like. So I'll go for Magma.
Sorry?
I'll go for Magma.
Okay, and why?
Because the project seems to be very well thought. It's, there's a hub and spoke, there's exploration upside, it seems. The business seems to be funded, and I like very much the local element of it, which is guys in an area that know everything about it, that were able to identify something and jumped on it. That's very, very valuable, I think.
Thank you. One vote for Magna. Mr. Dixon.
That's 2 votes for Magna. And I echo everything that my colleague here said. It's, Sudbury's the best, I will say it because I'm Canadian as well, the best nickel province and area in the world. among the very best. The local content with the management, and management actually owns a lot of stock as well. And the FNX analogy is an excellent one. That, you know, the footwall discoveries that FNX was pulling out 15 years ago. Do you know that in 2006, FNX Mining was the #1 stock on the TSX in terms of percentage gained? I'm not drawing an analogy there directly, but I'm just saying it was because they hit those high grade footwall discoveries, and I know that that's the strategy, particularly at Crean Hill, and they just made that acquisition. Right metals, right time, right jurisdiction. That's my vote.
Thank you, Mr. Dixon. Mr. Porter.
I'll just point out that Rob is also the major shareholder of Magna, so we could have all been bribed as well. Just pointing that out. I think my colleagues up here were fine with that. I, perhaps unsurprisingly, am also going to go with Magna. I think it's probably the most advanced project in terms of nickel sulfides that I've seen for quite some time, and got some great neighbours as well. Tier 1 jurisdiction, and the world is certainly going to need a lot of nickel over the next few years as well. So for us, or for myself, Magna it is.
Well, I think we've got it, but I would like to continue with Mr. Burridge.
Well, I'm going to be a little bit controversial here, and I'm going to go for Mako because it's solid exploration, years of experience has gone into building up a land package, and I love Magna. There's definitely space for it in the portfolio, but if I'm putting $1 million into exploration, which is the title of this panel, I'll go with Mako. All the other stories were great as well.
Thank you. And finally, Mr. Street.
Yeah, thank you. I just wanted to say that all five I thought were very good presentations, and very well presented and insightful. I'm going to split my vote between two, and the first one is Mako. I've always been a big fan of Côte d'Ivoire. I think it's a really good start to the project. I think it's well valued. I think the team's done it before. And the second one, predictably, might be Magna. I'm not generally a big fan of hub and spoke type models, but having been to Sudbury, I can see how that might work. I think they've got a good team. I thought that was a good story.
Thank you. What a great panel and what fantastic presentations we have today. I would like to, on behalf of Mines and Money and everybody here who's participated all day, we thank you very much. I'd like to present $1 million to Mr. Paul Fowler, the VP of Magna Mining. And you get a bottle of champagne, two actually. One from yesterday and one from today. Great job, sir. Fantastic job, and fantastic job with everyone. Thank you so much.
Thanks. Yeah, well, thanks everyone for listening. I hope the presentation resonated. We're super excited about what the next year holds. We've also been pleasantly surprised by what's happened to the share price in the last month since we closed the transaction. So, long may it continue. Thanks very much for coming, and I hope to see you next year. Thanks. Thanks.
And I'd like to thank our judges. Give them a big hand. Corinne Michelle Nasser, Rob Dixon, Daniel Porter, Mark Burge, and David Street. Thank you so much for your participation. I'm Ellis Martin. It's been great being here for the past 3 days or so. Much love and happy investing. Cheers.